Take a look at stocks. Dow's negative. We've been pretty much negative for the session. Jenny, September's historically weak. We know we're coming off a bit of a pullback in August, though. The way that the month finished off leads you to believe that the momentum isn't lost. In fact, it may be found once again. So what do we think about where we might go here?
Well, I think we're still stuck in a range, right? And I think that's where we're battling with the emotions of feeling better about things because we're getting to the end of rate hikes. We're seeing corporate earnings. They're better than we expect. I think, frankly, the consumer is holding up quite better. We're seeing Goldman say things like, hey, we're actually decreasing the chance of recession. So we have all these positives that make us feel better, but then we're fighting the math on it. And the math is that I don't see how corporate earnings get above $240 a share. I don't see how the multiple on the S&P gets above 20 times. With that, you've got a pretty heavy cap on the market. So I think we're kind of stuck in this range for a while, and it might just take a lot of time to get out of it. I think investors are really impatient. Everybody wants everything to happen right away, but there's so much that we still need to digest. We're digesting 18 months of rate hikes. We're digesting the Fed reducing their balance sheet. We're digesting the Inflation Reduction Act, putting money back in. We're digesting unemployment levels that are changing. We're digesting inventories. Everything's kind of distorted. We want it to happen all at once. We want to get back to that high growth, but I think it's really hard to do that. So I think we're stuck.
Joe, are we stuck?
I think the best thing that happened is that the market rallied 4% from the August 18th low because you've built in a little bit of a cushion if, in fact, September lives up to its reputation as being the worst month for equities. I do think Jenny's onto something. I think right now is a time to exhibit patience. We've already priced in the fact that the Federal Reserve is not going to be cutting rates in September. The Fed funds rates probability 93% of no rate hike. So that's not the premise. So really, what are you pricing risk assets on in the month of September? And it is, what are earnings going to look like? What's the expectations for earnings in the here and now? The problems for the market remain. Where are Treasury yields? The U.S. dollar at its highest level since March. And, oh, by the way, oil now trading at $87. That's a little bit of an uncomfortable price.
I mean, earnings expectations for this quarter, are ticking positive, right? So you got to live up to that. Do you think the market is adequately pricing? Forget about the idea of cuts. Do you think the market is adequately pricing in the idea that the Fed may be done and that they might not do any more? I mean, if you listen to Waller, data doesn't say we need to do anything imminent. The last week allows the Fed to proceed carefully. Bostic last week said rates are high enough. If that starts to become the prevailing chorus from the Fed, do you think the market has adequately priced all of that in?
I don't think at the end of the day it really should be mattering to investors.
Well, it matters for rates. If you highlight where rates are,
yeah, but
rates matter more than anything.
But I think we're beginning to grow comfortable with the premise that rates are going to stay higher longer than we expected. And I think what that ultimately means is maybe there's not the upside potential for equities that we previously thought because you've got this, competition coming from bonds and from yields on the other side of that. But I just don't think the Federal Reserve is the variable anymore. I think there are other exogenous factors that could affect the pricing of risk assets coming from the macro, the weakness in China, the weakness in Europe, which is going to lead to a strong U.S. dollar. And again, oil prices, last couple of weeks, oil prices have really come out of nowhere. What is that going to factor into the inflation equation?
Okay.